So, you're getting into trading, right? And you've probably heard this word pip thrown around all over the place. It sounds so small, maybe even a little insignificant, but trust me, it's one of the most fundamental concepts you need to get. Today, we're going to break down exactly what a pip is and, way more importantly, how this tiny little unit can have a huge impact on your bottom line.
You've seen it, right? You look at a price for something like the euro versus the dollar, and it's this long number with a bunch of decimals. And you're just like, what do those tiny little numbers at the end even mean? Don't worry, we have all been there. That's actually where all the action is. And by the end of this, you'll know exactly what you're looking at.
All right, let's get right to it. First things first, what in the world is a pip?
Okay, so the fancy definition is that pip stands for percentage in point or price interest point. But honestly, don't get too hung up on that. Just think of it like this. It is the absolute smallest, tiniest, most basic move that a price can make. It's like a single step in a giant staircase.
And this is why it matters so much. Traders don't say, oh, the price went up by a little bit. No way. They'll say, it moved up 10 pips, or it dropped 20 pips. It's the universal language for measuring these price changes, and this is the important part. It's how you're going to calculate your profits and your losses.
Okay, so we've got the what. Now let's look at the how. Where do you actually find these pips out in the wild? We're going to start with the biggest market of them all, Forex.
So, for most of the big currency pairs, like the euro against the US dollar or the British pound, the price is quoted out to 4 decimal places. And for these pairs, 1 pip is a change in that fourth and final number. Simple as that.
For example, let's say you're looking at the euro USD and the price is 1.1234. That last digit, the 4, that's the pip. That's the number you want to be watching.
And if that price ticks up from 1.1234 to 1.1235, well, you guessed it. That's a 1 pip move. It's the smallest step up it can take. See? Not so complicated?
But of course, just when you think you've got it all figured out, there's always an exception to the rule, right? In the world of Forex, that exception is almost always the Japanese yen. It likes to play by its own rules.
Yeah, any pair that has the Japanese yen in it, like the US dollar versus the yen, is different. These are only quoted to 2 decimal places. So for these guys, the pip is the second number after the dot. A move from, say, 135.62 to 135.63, yep, that's 1 pip. The big lesson here is just always check how many decimal places your currency pair has.
All right, that's currencies covered. But what about other things people trade, like commodities? Let's take a look at a big one, gold. It has its own little quirks too.
Okay, so for gold, which you'll often see as XAU/USD, it's actually pretty similar to those yen pairs. It's quoted to 2 decimal places. So if gold is at, say, $1925.30, a single pip move just takes it to $1925.31. Basically, 1 pip is 1 cent. Nice and easy.
Whoa, hold on though. Here is a super important heads up. Some brokers do things a bit differently for gold. They might talk about points instead of pips. And in their world, a full $1 move in the price, like from 1925 to 1926, is equal to 100 pips, or points. So you absolutely have to check how your broker defines it, or you could get seriously mixed up.
Okay, deep breath. We know what a pip is, we know where to find it, but now we get to the part everyone really cares about. The big so what moment. What is a pip actually worth in cold hard cash?
I mean, that's the bottom line, isn't it? A single pip is a tiny, tiny fraction of a price. So how does that little movement translate into real money in your trading account?
Well, here's the thing. The value of a pip isn't one size fits all. It all comes down to your lot size, which is just a fancy way of saying how big your trade is. If you're trading a big standard lot, every pip is worth about 10 bucks. A smaller mini lot, that's $1 a pip. And a tiny micro lot is just 10 cents per pip. So the bigger your trade, the more powerful each little pip becomes.
Let's put some real numbers on this. Imagine you're trading a standard lot of Euro USD. If the price moves just 10 pips in your favor, bam, that's a profit of about $100. See how fast those little pips can add up when you're trading a larger size? And it's the same idea with gold. Let's say you're trading a standard lot of gold and it moves 100 pips, which, remember, is that $1 change we talked about. Well, that's also going to be about a $100 profit or loss. The principle is the same no matter what you're trading.
All right, that was a lot of info, I know. So let's boil it all down into a quick, simple cheat sheet that you can take away from all this.
Okay, let's lock this in. For most Forex pairs, you're looking at that fourth decimal place. See the Japanese yen? It's the second. For gold, it's also the second decimal. But remember that a $1 move can be 100 pips. And the most important part? How much money each pip is worth? Well, that all comes down to your lot size. Standard, mini, or micro. That's pretty much the whole story.
So there you have it. You now know exactly what a pip is, how to spot one, and what it's worth. But that just leads to the next big question, doesn't it? What is it that actually makes the price move pip by tiny pip in the first place? Well, that is a whole other adventure for another time.